Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Since the start of 2021, everyone from Goldman Sachs to Bank of America, they have called the beginning of a new super cycle and hot listed commodities as their preferred asset class over the next decade. Fast forward a year on and it's very evident to see that the commodity super cycle, it shows no signs of slowing anytime soon. Everything from metals to energies to agriculture markets setting new record highs. Last week, a long list of commodities, they blasted through multi-year highs. Aluminium prices, they hit an all-time record high. Nickel prices hit a 10-year high. Uranium prices surged to 8-year highs, surpassing a record 7-year high set 1 month ago. The bullish momentum also spilt over into other commodities, with natural gas prices rallying over 16% to post its biggest weekly advance since August of 2020. Meanwhile, WTI crude oil, that soared to $88 a barrel, and Brent crude oil hit $90 a barrel, notching up a gain of over 35% since the start of this year. Elsewhere in the commodity markets, palladium prices hit a 4-month high, taking this year's gains to over 25%. Palladium's explosive rally also pulled up lithium prices, sending the metal skyrocketing to all-time record highs. Lithium prices, they're now up 497% from this time last year. Meanwhile, rhodium prices, which is one of the rarest precious metals and a byproduct of platinum and palladium, that has surged 3,000% since the start of 2020. That's a phenomenal gain of 125% month on month over the past 2 years, leaving every other asset in the dust. There are plenty of fundamental factors why commodities are on the move, but the key bullish drivers, that includes rapidly surging global inflation, tightening supply versus soaring demand, logistical bottlenecks, growing supply chain issues, all combined with a very disruptive economic recovery from the pandemic that shows no signs of fading anytime soon. And let's not forget the switch to a greener world, which is fueling fierce demand for commodities such as aluminium, copper, palladium, nickel, lithium, uranium, as economies they race to decarbonize the world by 2030. If you've been waiting on the sidelines for the next best opportunity to get into the commodity markets, then right now is optimal to take action and position yourself ready to generate substantial gains ahead as the commodity super cycle enters its next phase. There's a lot of traders out there that missed the explosive moves over 2021. The ones that saw the opportunity, they took action and they accumulated life-changing wealth. In fact, the majority of our clients at the Gold and Silver Club, they made between 6 and 7 figures in 2021. Here are just some of the testimonials which have been flooding in from our clients, sharing their successes and their achievements. You do not want to be the person who knew about this commodity super cycle, had the chance to capitalize on this lucrative opportunity, but you missed out again. All in all, the evidence is mounting that a new commodity super cycle is underway. It goes without saying that commodities are definitely one of the hottest and most exciting asset classes to watch in 2022. Whichever way you look at it, the case for commodities in a well-diversified portfolio, it has never been more obvious than it is right now. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. So firstly, off the back of both last Tuesday and Thursday's reports on both gold and silver, we talked you through this exact scenario for essentially gold prices to rally in the lead up to the FOMC statement. That move would then get faded, i.e. traders would then FOMO in, they would buy at the top of the move when metals are breaking out to 2-month highs. When we are banking profit with our clients at the Gold and Silver Club, essentially you're seeing a lot of traders get their delayed confirmation in the market. They are unaware of the usual sell-off that you get after an FOMC statement, and we've essentially seen exactly that, a bull trap, a 3-day correction to the downside or 3-day impulse move here, which has now allowed us, in fact, on Friday to then buy back in at much lower prices after we've seen over a 700-point drop to the downside here for gold. Everything that we talked you through last week, to expect this at the end of the week after the FOMC statement for pressure to the downside. Not only that, you're moving into the China public holidays, where over the course of the next week, China will be off for 1 1 week to celebrate the new year. During that thinner liquidity, you often get more exaggerated moves in the market, but in fact, often a lot of China already start to take that time off before the New Year holidays. Hence, you weren't seeing any support into the Asia Pacific session over Thursday into Friday either, which helped to accelerate this move lower, which has given you a much better opportunity now to buy in lower, not only on gold here, but of course silver as well, which we highlighted to you in detail last week on Tuesday and Thursday's gold and silver asset of the day. That's absolutely played out. So you can see here, we've seen over a 7% correction to the downside in the last week. Again, the FOMC statement was faded. You then got a breakdown in price action over Wednesday, Thursday and Friday, all the way back down towards the swing lows. Now silver is trading back towards the lows that it was at the beginning of January, so it's given back all of those gains and just allowed you to get back in again at much lower prices. As we mentioned with you last week, we banked last week over 8,000 points profit with our clients at the Gold and Silver Club. Another market which generated us a lot of profit is the energies in the last week. We banked over 3,000 points in this market. We banked last week over 555 points on gold and over 5,000 points on platinum as well. You can see energies have been on an absolute tear. They broke out to 8-year highs last week, back above $87 per barrel into the close. Bear in mind with energies, we have the OPEC meeting going into next week on Wednesday. Expect more volatility off the back of that, but essentially what we expected has played out. Retested the swing highs, broke back above those levels. It's the strongest close that we've had so far in 2022, closing at $87 per barrel. So very strong move there into the close as well. If you move over to platinum, we of course also made sure to bank into strength last week, locked in a windfall amount of profit, over 5,000 points banked here on Wednesday before the FOMC statement. Now going into next week, there are a number of news items that you definitely want to have on your radar, which will of course affect the markets here. Firstly, at the beginning of next week, you have China off on their 1 week public holiday, so you're going to see less liquidity during the Asia Pacific session from Monday through to Friday essentially. You can see here copper prices, they came under pressure right at the end of the month, but then going into next week, on Tuesday we're going to be moving into a new month. So Tuesday the 1st of February, where new capital can then come into the market. Often this can provide further support and a bounce to the upside. Then on Wednesday we have the OPEC meeting, but Thursday you've also got the Bank of England and the European Central Bank announcement. So again, very specific cycles moving into that. That'll create lots more volatility and opportunities for you to trade that volatility. And then next Friday you've also got the non-farm payroll data, which of course is one of the biggest news items that traders look out for over the course of the month. So it's going to be a very heavily news-driven week next week. Plenty of opportunities to capitalize on that volatility. As you know, extraordinary times, they do create extraordinary opportunities. Right now, we're living in one of the most exciting and rewarding periods ever in monetary history. Whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, then now is the time to take action to give yourself the gift of a better 2022. Right now, you have an opportunity to make 2022 your best year yet, which based on our research, we predict is going to be a record-setting year due to all the macroeconomic events that are currently unfolding. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adapt your strategy to the current market conditions. Most importantly, utilize a professional, research-driven approach. In these times of heightened volatility and rapidly surging inflation, the importance of having an income-generating skill like trading has become a must-have necessity. If the pandemic has taught us anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer an option. It is a priority to make sure that you're inflation-proof and that you can thrive in these highly lucrative market conditions, not just survive. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there using outdated technical analysis and gimmicky technical indicators will not work, and you're guaranteed to get crushed and chopped up in these markets. You need to be utilizing a research-driven approach to the market, using data, statistics, market intelligence, alongside that learning and understanding understanding the daily, the weekly, the monthly, the quarterly cycles for each commodity, learn the intermarket correlations, the ratios in the market, key areas of liquidity, alongside that capital flows, macroeconomics, the fundamentals, and of course, learn and understand how the hedge funds, money managers, banks, and institutions are positioned in the market in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get exclusive access to our live trading room webinars. You get real-time trade ideas, access to our institutional research and market intelligence, access to our private members academy website, and support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.